Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that a top analyst has a 100% success rate on. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at recent buy ratings from a 5-star analyst who has an impressive 100% success rate on several stocks. We're going to take a look at these companies, what it is that they do, and if the rest of Wall Street agrees. And spoiler alert, they don't. Today we actually have a hold, a moderate buy, and a strong buy. So we're going to see which stocks they agree on and which they differ. The top analyst that we're looking at today is with Bank of America Securities. Her name is Mariana Perez Mora, who currently has a 5-star rating and is ranked number 178 of over 9,000 Wall Street analysts, an impressive success rate of 90% and an average return of over 32%. Just before we get into her recent stock coverage, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now, I came across this analyst today as she just recently increased her price target on Palantir Technologies. She reiterated a buy rating on the stock, bumping up her price target to $50. Now, she's rated the stock 25 times and has a 100% success rate. They trade under the ticker PLTR, currently priced at $34.40. They've seen some great growth this past year, climbing 120% and gaining 45% in just the last 3 months. Palantir is a software company that is focused on big data analytics. They create data analytics software to help organizations manage large data sets and make better decisions. Their products are used by a variety of organizations to help protect sensitive information, uncover criminal activity, help build cases, and support intelligence agencies. The buzz surrounding Palantir this past week is the news that they'll be joining the S&P 500 index. Palantir, along with Dell Technologies, is set to join the S&P 500 effective September 23rd, the last trading Monday before the quarter ends. And back near the start of August, Palantir did come out with a solid Q2 earnings report, with both an earnings and revenue beat and an increase to their full-year revenue guidance. For their second quarter, they reported earnings per share of 9 cents, beating expectations by 1 cent per share, and revenue grew 27% year-over-year to $678 million, beating by over $25 million. The company also saw their U.S. commercial revenue grow 55% year-over-year. And as I mentioned at the start, our 5-star Bank of America analyst just increased their price target $10 on the Palantir stock today. They said the firm views Palantir's capabilities, technology, and path forward facing a fundamental misunderstanding and contends that the upcoming S&P 500 inclusion provides a watershed moment for institutional investors to revisit what they know about Palantir. The company's non-conventional sales approach, where the engineers play a key role, has been highly criticized, but the firm contends that the engineer sales bond is a key factor to the company's pricing strategy and views this approach as a key differentiator to profits robustness, especially compared to other software companies. But this is one stock that Wall Street analysts do not seem to agree on. We have quite a mixture of analyst ratings. Overall, Palantir comes in as a hold, with 15 current ratings breaking down to 4 buys, 5 holds, and 6 sells. The average price target comes in at $27 for a downside of 21%, and you can see on the right we have a wide range of price targets. Looking down below, our high-end price target is Mariana here from Bank of America with an upside of 45%, while our low-end price target is a sell from RBC with a downside of 73%. The second company that Mariana has a 100% success rate on is Booz Allen. And on July 29th, she assigned a buy rating with a price target of $175. Now, she does just have 6 ratings on the Booz Allen stock, but it does come in with that 100% success rate. Trading under the ticker BAH, the stock is currently priced just shy of $151 and has climbed 35% over the past year. In the last 3 months, it is fairly flat at up 0.07%. Booz Allen is a management and technology consulting company with more than 110 years of experience. They transform missions with tomorrow's technologies to advance the country's most critical civil, defense, and national security priorities. They're trusted as the largest provider of AI to the federal government, combining leading AI, cybersecurity, and engineering with emerging tech to deliver results at the heart of their clients' missions. Just a couple of weeks ago, the company announced a new contract with the Department of Homeland Security. The task order is to continue supporting their program that makes federal government data and networks more resilient against cyber attacks and is worth a base value of $421 million with a ceiling of $1.2 billion. In their Q1 earnings report near the end of July, the company did see an earnings and revenue miss. Their first quarter earnings per share came in at $1.38, falling 14 cents shy of analyst expectations, and revenue came in at $2.9 billion, missing by just $30 million, but it did grow over 9% year over year. And following that Q1 earnings report, our 5-star analyst Mariana did reiterate a buy rating. She said that despite a decline in margins, which fell short of expectations, they perceive this as an overreaction by the market, especially given their reaffirmation of their fiscal year expectations. They believe Booz Allen is well situated to capitalize on emerging opportunities in AI, customized cyber solutions, and technological modernization. They also highlighted their robust growth fundamentals, such as a significant backlog and a strong hiring rate that surpasses internal projections. Now, we still have some differing opinions from analysts on this stock, but it is leaning towards the buy side. Booz Allen has 9 current analyst ratings, coming in as a moderate buy with 6 buys, 2 holds, and 1 sell. The average price target comes in at $165 for an upside potential of 9%. Looking at our ratings down below, here we have our 5-star analyst Mariana. She's not the high end here, but at $175 she is close with an upside of nearly 16%. Our high end price target is $185 from Jefferies with an upside of 22.5%, while our low end price target comes from Barclays with our sell rating and a downside of nearly 6%. And the third stock that our 5-star analyst rates a buy is Caci International. And she just reiterated this buy rating back on August 27th with a price target of $535. She's had 12 ratings on this stock with that 100% success rate. Trading under the ticker CACI, the Caci International stock is priced at $467, having grown 47% over the past year and climbing 9.4% in the last 3 months. Caci provides distinct expertise and technologies to support U.S. government customers in critical national security missions. They have a range of different services, including investigation services for security missions, including background investigations, different technologies, including software-defined electronic warfare, signals intelligence, and counter-unmanned systems, as well as dark web intelligence, providing secure access to intelligence on the dark web, and hybrid cloud security capabilities. Caci shared their fourth quarter and full year results back on August 7th, and the company did see a quarterly earnings and revenue beat. They reported Q4 earnings per share of $6.61, beating expectations by 68 cents. And on the revenue side, they came in at $2.04 billion, which beat expectations by $110 million and grew 20% year over year. Looking at their annual results, revenue came in at $7.7 billion, growing 14%. And just a couple of weeks ago, our 5-star analyst did increase her price target on the Caci International stock. She said their Q4 and full year results are emblematic of the underlying portfolio strength, and this is just the start. They see Caci's pipeline of opportunities supporting near and midterm growth. They have $9 billion of submitted bids and $14 billion of bids expected to be submitted in the next 6 months, which is 38% higher than Caci's new business bids at the beginning of fiscal 2024. And other analysts seem to agree with Mariana, as the stock does come in as a strong buy with 8 buy ratings and 2 holds. The average price target comes in at $504, implying an upside potential of 8% from current prices. Looking at our list of ratings down below, on the low end we do have a buy back in July that's now a downside of about 2%, as it's already surpassed that price target, while our high end is our 5-star analyst from Bank of America with an upside of 14.4%. So that is a quick look at 3 stocks that our 5-star analyst has a 100% success rate on. Let me know your thoughts on these companies in the comments down below and which one you think has the best upside potential. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.